Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. After having found support on our natural trend line over the last several months, where we saw a number of consecutive higher lows post, we can see now that soybean has found weakness in breaking through that key support level that we had been speaking of before, and what had been support has now become very good resistance, with the market making a run down to our target objective of 906 3/4. We do have volatility-based support down below that rests between $9 and $9.11, and the market looks very much like it is poised to make its way down to volatility-based support. Upon reaching 906.75, we would not be surprised to see the market collect itself, as it would be retesting previous lows, and that 906 3/4 number happens to be our make or break level. In the event that the market were to break below or close below this 906 3/4 number this week, we anticipate that a run down to the next volatility-based support level could be on the horizon, where the market could reach somewhere in the neighborhood of 865 to 880. We can see where key resistance did form, where the market made a lower double top, coming in just shy of the 270-degree mark, and upon breaking the 360-degree mark of 924.5, we can see now that the market could very well be in trouble. If we see continued weakness come in for the balance of the week, a target objective somewhere in the neighborhood of 895 1/4 would not be unreasonable. We do have a time factor coming in for Thursday, March 7th. In the event that the market were to find support near 910 and bounce tomorrow at that level, that could be the potential indication for the market to at least make a bounce off of what has been volatility-based support, and for the market to potentially find a little bit of resistance near the 925 mark. In any case, soybean continues to look like it wants to be weaker. After having tested our 1-by-1 angle and finding weakness from that point forward, we do anticipate that if the market does break below this 910 level, somewhere in the neighborhood of 885 to 890 is plausible for a downside move over the next couple of weeks. Our long-standing make or break level for the July corn contract was at 393 1/4. And the market had been collecting around this area for several months. The market was finally unable to hold itself above that area as it had been doing previously, and we can see where that 393 1/4 number became resistance. The market fell from there and was able to come down to our price objective of about 373. The market came to that level and posted one of our N-band indicators, from which point the market bounced back up, and what had previously volatility-based support has now become resistance, and we can see clearly upon reaching the top end of that resistance zone of 386 1/4, the market has since been moving down and would not be surprised to see a retest of previous lows. If the market were to close somewhere in the neighborhood of 373 this week, we would be looking for the market to break 370 and perhaps lower in the coming weeks. A key area of focus for the July contract had been its point of control level of 392.5. Its inability to find strength above that level was a key determining factor in this market, perhaps having huge sellers come in, and as potential sellers came in with limit orders near that 392.5 to 393 area, the market has since been in a very strong sell-off. The market then moved down, and we can see where volatility-based support coincided with our 270-degree level, and what was initially potential support again has become resistance, with the market turning down. We'd then be looking for corn to make its way down one standard deviation from that point of control level to go down to a price objective somewhere in the neighborhood of 370, with the potential of touching the 360-degree mark below of 364 3/4. We can see similar support and resistance information from this chart, where resistance came in near a 2-by-1 angle. Although we do have a potential time factor coming in on Monday, in the event that the market were to continue down into this time horizon, we could potentially see a small bounce, or for the market to become range bound after having been down for the last week and a half to 2 weeks. In this week's analysis of the wheat complex, we have employed our arc swing technique, and in doing so, we use a major pivot low and use a radial arm of that market swing to give us perspective as to where the market can potentially have key support resistance levels and where the market can have some turning points. We can see that the first radial level gave us a pinpoint area where the market gave us a small low near 517, then gave us a bounce. But what is of particular interest is the next area where the market moved up, where this recent massive downside drop came in. And if we recall from several weeks ago, we talked about how the market had run out of time to potentially make its way higher. In running out of time in concert with the 529 level, the market then gave us a very strong reversal, broke through volatility-based support on both levels, and continues to be on the downside movement in a very strong fashion. The next key level that we'd be looking for this contract would be the tangent line of this arc swing that gives us a price level of 451.5, and this would be a minimum price objective for this week contract as it makes its way down here. Upon reaching 451.5, we'd be looking for the potential for the market to give us a corrective bounce, and a bounce that can make its way up to one of our trend lines overhead is plausible after the market makes its way down to about 451. A bounce that perhaps comes up to that trend line and then comes back down could very well be what we see. In the short term, the market continues to be very weak, and we're not looking for a bullish movement in wheat until it gives us a little bit more confirmation. Our time factor of February 28th did not yield very much information in that the market simply went sideways for about 3 to 4 days and has now resumed its way back down. And in fact, we can see that the market has been in such a strong move to the downside that we are now looking at 3 standard deviations below its point of control in terms of what it's been touching most recently. When markets make their way down to 3 standard deviations below its point of control, that is often an indication of potential exhaustion, and so again, we would not be surprised to see the market make a bounce upon reaching that 450 target horizon that we spoke of recently. In closing, we'll take a look at the crude oil complex, and as we had discussed previously, we believe that somewhere in the neighborhood of 58 to 59 should pose very good resistance for this contract. We can see that upon first attempt, the market gave us a small move to the downside and has yet been able to cross through that 58.84 level, which coincides with our Fibonacci 78.6% area. The market has been in a sideways movement, and we anticipate that the market is due for a reasonable correction that can move down somewhere in the neighborhood of 51, which would coincide with what appears to be the new set of volatility support levels that are establishing itself for this contract. Upon making its way down to about 51, we anticipate that one more leg to the upside would be plausible, where this market could challenge our make or break level of 62.90 or even higher upon making its way up. We have volatility-based resistance overhead sitting in the 62.5 to 64.38 area, and this would be a reasonable target for this contract if it were to give us a reasonable correction down to 51 and then start to make its way back up again. Thank you so much for joining us for our regular market update. Look forward to touching base with you again next time.